We made good progress this quarter with some very good underlying operational results. Before I get into the numbers, there's two items that are worth calling out. Firstly was the impact of the sale of our stake in our Africa businesses. As an accounting matter, that generated a loss of £1.6 billion. Now that doesn't impact our capital position and it doesn't impact the book value of the company. Secondly, we did take a provision for PPI of 700 million in the quarter. Excluding these items, the group return on tangible equity was 7.2%, which is overall a very good performance. And within there, our core businesses continue to generate about a double-digit return. Barclays UK generated a return of 19.1%, with underlying profits approximately flat. Within there, our income was up 2%, and within there, we generated a net interest margin of 370 basis points, and that was up on the prior quarter. And that fueled an increase in our net interest income of 4%. Barclays International had a very resilient performance with a return on tangible equity of 12.4%. The corporate and investment bank generated a good return of 11.1%. However, we shouldn't lose sight of the fact that now that we're folding non-core back into the core businesses, there will be some downward pressure in returns in the corporate investment bank. So we still have some work to do to make sure we can get that business into double digits, which we are confident of doing over time. Consumer cards and payments had a good return of 19.4% as we continue to invest to grow that business. We're very pleased that we've won the American Airlines transaction, and that allows us to continue to invest for future growth in subsequent years. The other thing we're very pleased about is that our impairment trends remain very stable. There's two other items of note. Firstly, we closed our non-core business at the end of the quarter. We're very pleased with that. We closed the business with 23 billion of risk-weighted assets, which was less than we'd guided to. And of course, we completed the Africa sale, which I talked about earlier. That Africa sale not only completes that divestiture, but it also strengthens our capital position and will continue to do so as we get the appropriate regulatory treatment over time. Our CET1 ratio at the end of the second quarter was a very strong 13.1% versus 12.5% in the prior quarter, which leaves us at our end state capital target of around 13%. And that strong capital position now allows us to focus on increasing the group's returns. Now, something that goes hand in hand with capital is, of course, how much we distribute back to our shareholders. We would expect to be paying a 3p dividend for this year, which is what we've guided to previously, but we'll also update everybody at the full year results of how the dividend policy of the company will be beyond that.